It's about that time of day again. My name is Joseph. Thursday evening, February the 8th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish and targeting the prior month low. And I have a key battle zone waiting overhead for reliable selling opportunities on Friday morning. The S&P is also bearish, getting clobbered with another strong move lower this afternoon. And I have my eye on a key reversal line for selling opportunities tomorrow. Nasdaq also bearish and trading at major support. That tells me to wait for rotation back up to resistance for the best selling opportunities on Friday. And of course, gold is bullish but trading into major resistance tonight. So I'm waiting for buying opportunities after a two-legged pullback tomorrow morning. And wrapping up tonight on the euro is bearish but trading sideways in a range. That tells me to look for selling opportunities using buyer failures up above the triangle with the two-try rule tomorrow. Got a great newsletter in store for you guys and gals tonight. We got some big moves in today's session. I'm expecting to see a couple ranges in tomorrow's Friday session. We got some prior week levels to watch. We got some big monthly levels to watch. And I got a great plan to set up for Friday's session. Before we jump into charts, though, don't forget, if you're on YouTube, make sure you subscribe to the YouTube channel and click the bell icon so you always get notified when I publish a new video. If you're here on the blog at sidewaysmarkets.com, don't forget to join our mailing list. That way you'll get notified every time I publish a new video. And while you're here on the blog, don't forget I'm always posting exclusive charts, links, and updates throughout the week on my social media channels. Follow me in the lower left-hand corner on whatever your favorite flavor of choice. Speaking of charts, how nice is this? All the charts from tonight's video, you can have them ready on your computer for tomorrow, right where it says click here to download today's charts, be ready for tomorrow's session. And then don't forget, speaking of tomorrow's session, what are you waiting for? Grab that free pass. Come out and join me as a guest in the trade room. Come out and see what all the chatter's about, right? And test drive your membership here at School of Trade. Grab that free pass, upper right-hand corner, and I will see you in the trade room. Speaking of which, if you got any questions, you can always hit me up on live support. Any questions along the way, if you're on YouTube right now, post those questions. Anything you want answered, post them in the comments on YouTube. And don't forget, if you're here on the blog at Sideways Markets, I've got live support on the right-hand side of the website. Let's jump right in. It's Thursday evening. We got Friday coming right around the corner. Tomorrow's Friday, February the 9th. What do we have here on the schedule for tomorrow? Well, first things first, there's not much happening in the overnight session. We do have some news out of China at 8:30 p.m. Eastern time. That is really early in the evening, so probably not going to affect us too badly as we go into London tomorrow morning. As we go into London tomorrow, you'll notice there is quite a bit of minor news on the calendar here for tomorrow, but definitely nothing expected to really move these markets around. We get the labor force survey at 8:30 from our good friends to the north. Anytime we see Canadian dollar news or CAD news, we always know to watch out for oil, so keep an eye on that. Or, of course, if you're trading the CAD, right, that will also be a market to keep your radar on tomorrow morning. Other than that, though, there's not a lot of news on the schedule. And, of course, anytime we have a Friday, right, there's a couple things we think about, right? Early in, early out, right? That is the first thing we always kind of have in the back of our minds on Friday morning. We know that as the day gets later on a Friday, after we get past 10:45, 11 o'clock, 11:30 Eastern time on Friday morning, we know that most professionals have made their money for the week, and they'll start peeling off positions, getting ready for the weekend. So we know that volume will usually dry up on a Friday morning as we get closer to the lunchtime hour at noon. We also know that towards the end of the week, and this goes for the end of the day, end of the week, end of the month, we know that traders typically will take bigger risks. And so when you combine that lower volume along with the bigger risk taking, right, it creates a real dangerous cocktail that can lead to very unexpected, dramatic, and illiquid moves late in the day on Friday. Oftentimes, right, I'll have a position that will be open on Friday, leave a portion to be, to the close on Friday, but be very careful getting into new positions and taking on additional risk Friday after 11 o'clock Eastern time. So early in, early out on Friday. The next thing you want to think about are those prior if I can spell here, prior week open, high, low, close levels. Now this goes for the end of the month and the end of the week. At the end of the week, we start looking at those prior week open, high, low, close levels, especially the high, low, and closes, right? The opens aren't as important, but the high, the low, and the closing price of last week are very, very important, and they'll act as price magnets as they start to show up on these charts. We don't have a lot to worry about on crude or the E-minis, but euro and gold, we definitely can see those prior week levels. And it's also important too to mention too that over the last few days here on the E-minis, right, ever since last Friday's right bloodbath on that non-farm payroll report, we've seen a ton of volatility on the equities, equity indexes, right, all the equity tools, right, that we trade every day. And whenever we have a lot of volatility all throughout the week, oftentimes Fridays can be a real range bound, almost kind of paranoid type of market, right? You know, traders aren't going to want to take big risks into the weekend. I'm sure a lot of people are going to be scratching their heads, wondering what happened. It's, you know, this week was a great example, right? One of the biggest reasons why I like being a day trader instead of a swing trader is that we're flat at the end of the week. So the good news is most day traders, we had a great week this week, and we're going to finish up tomorrow in our trade room, most likely with another great day tomorrow. We always have a good day in our trade room. But I'll tell you right now, there's probably a lot of long-term traders out there that didn't have a very good week, and we may see them really hesitate to do anything going into the end of the week. We may also see quite a choppy market tomorrow as traders try to kind of position themselves, take some guesses into what may coming next week. So I'm watching the E-minis closely here. It's been one of those weeks where the volatility has been so great that it's been very difficult to manage risk properly. So we have really taken a very standoffish approach in our trade room. The good news, though, is oil, gold, and euro have really made up for that lost opportunity. I'll tell you, I love the E-minis, but when they act like this, you've really got to kind of step back and say, okay, right, I'll let you kind of calm down, you know, as these E-minis kind of have a little temper tantrum right now, right, on the charts. So be aware of that. Tomorrow, we may see it really slow on the E-minis tomorrow. If we do see it real slow tomorrow on the E-minis, be very, very careful because you know why. Traders are beat up. They're exhausted from this week. I'm sure a lot of long-term traders have literally been at their desks since last Friday, right? So you're going to have a lot of people out there kind of exhausted on those equity markets going into the end of the week. So just, you know, be careful on those E-minis tomorrow. Like I said earlier, right, this was a great example of why we love being day traders, right? Much, at least from my point of view, right, much easier to find that short-term momentum, right, each day, find the chance to define the direction, right, find the areas of interest, find the patterns, make your money, and go home, right? That removes all the stuff a lot of these folks right now are battling with right now. Not to say there wasn't a lot of money made over the last 2 years in this big bull run up, right? I don't want to diminish that, but right now you're really finding out who can trade these markets. So easy on the E-minis, prior week open, high, low, close levels tomorrow, and early in, early out, right? You know, the plan there for the calendar here for tomorrow. And then, of course, we'll come back, right, and we'll worry about the news for next week when we come back on Monday's newsletter. Jumping into charts. Sorry for taking so long on that intro. I want to make sure you guys are ready on that. We've got crude oil, S&P, Nasdaq, gold, and we can't forget about the euro tonight. Starting off tonight on the Texas T. The black gold, right, the crude oil futures. Crude is bearish with a large channel as sellers try to finish this move down to last month's low with a measured move target in sight. This strong move lower is really important because anytime we see that much strength, we usually are going to get a pullback to the moving average. Lots of sellers will likely come back in around the 60, 71 up to that moving average and send this price right back down again. So we know right now here on oil, we can easily see if we connect these highs, bring it down to that low, that creates, right, that bear channel. Rotating off of that bear channel, we know where our target is. Our target is down at the low of that channel. At the same time, you can see here a bear flag, right? strong move down, slight bull channel. We never see the bulls take control, then it slams lower. That slam lower, anytime we see a real strong move in one direction, we're going to typically get a two-legged pullback and a retest of that low. That's a really important clue. At the same time here, right, I've got some prior swings that I'm marking up as the battle zone and some targets waiting for tomorrow. Strong move down, two-legged pullback, right, and a move down to a measured move and a key level of support, that prior month low. You'll notice here on oil, we don't have to worry about any prior week levels, right? We don't see many of those right now. The nearest prior week level is all the way up at 63, 67, right? So it's all the way up there, right? And when it's that far away, it's I don't want to say it can't be seen tomorrow, but that would require, right, almost a $4 move. And from what we've seen recently on oil, right, we did see almost a $3 move yesterday, but you know, talking about a $4 move on a Friday, not going to say it can't happen, but it's unlikely, right? It is unlikely. So what is our plan here? We're definitely bearish, right? Definitely bearish. Let's play that game. What if price goes up? What if price goes down? What if price goes sideways? Well, if price goes higher here right now, we get a little doji there with the high at 60.71. So that's definitely something I'm watching as resistance. Moving average is coming over. I'm looking for ideally here a little two-legged pullback up into that area of resistance and a sell to continue this move down. I'll be looking for the proper entry trigger, obviously, right around that area. We may also see it get above that moving average up into that battle zone. That wouldn't be surprising whatsoever. If we do see it get above that moving average, then I'm looking for that buyer failure off the moving average, buyer failure into strength into a pullback, right, and a pullback back down we go. There'll be two really easy patterns off of that. The most reliable, of course, will be the second of the two. After we get that buyer failure, it'll slide back below the moving average, and then, of course, we can look for that selling opportunity at the moving average going back down to retest that low. What if price goes sideways here? It definitely could. You know, we may see it go up, a little trap high, right back down to that low, and we may come out tomorrow, and we may see the market looking a lot like a sideways range, which we'll see a little bit more of right on the rest of these charts here tonight. If that happens, in other words, if we don't see lower lows as this tries to go lower, that tells us sellers are rejecting the idea of lower prices, and we should try to sell high. To sell high in a trading range, I'm looking for buyer failures up above the top of this range. Buyer failures require the 2-try rule. 1 try, 2 try, and then back down in. Look for those buyers to try once, look for them to try twice. Once we realize they're failing that second time, now we can look for that move going back down into that range. 2-try rule above the top of that range. That's the name of the game. What if price keeps going lower here? What if we keep going lower here? You know, what if we come out tomorrow morning here, right, and we're already hanging out down around that prior month low, right? Maybe we haven't reached the measured move yet, whatever the case may be. If that's the case, look left, find those prior swings. I never want to sell low, right? And how do you know if you're selling low? You're at the objective, right? It's an easy way to understand what is the definition of selling low. In order for you to understand whether you're selling low, you have to know where the market's objective is first. If you don't know where they're trying to go, how can you know if they got there yet? Make sense? Right? So you have to know where they're trying to go. The good news is in a trending market, most of the time the market's trying to get to either a channel low in a bear market, right? Channel low, or a measured move. Okay, 9 times out of 10, that's where they're trying to get to. Okay, so once they get within the striking distance of there, then now you're in that position where you could be considered selling too low. And so anytime I have a choice, right, I was either selling too low or waiting, I'm going to wait for a trap high, because that will usually be, right, the big move of the morning session, right? Get up off of that high, get back above some of these prior swings, and that should put you in a position where you can start looking for some great selling opportunities at resistance, right? Sell at resistance in a bear market. Don't sell at support in a bear market. Last but not least, how would this market reverse? There are 3 things we look for a reversal, and I see you guys commenting this below the YouTube video, right? Our new battle cry, our new call to action, right? Strength, pullback, strength. right? Strength, pullback, strength, right? How do we know when we have a reversal? Yep, strength, strong move up, pull back to the moving average, right? This is obviously be nice to get it above the top of that channel. That would be ideal. And then once we see those buyers take off to the upside, then we know where we go from there. Hidden channel, two-legged pullback, right? Hidden channel, two-legged pullback. Usually this will pull back somewhere between the top of that prior swing and the low of that channel, right? And fire away, right? Top of the range becomes our target. And then who knows, right? Maybe this becomes a big three-legged move going higher. I'm not going to hold my breath on this one tomorrow at 63, 67, right? But again, it's not impossible, but it's also not very probable either. We got better odds right now of getting back down to that prior low, right, down to that measured move than we do getting back up to the high of day. So, got a good plan here on the oil. Don't forget, early in, early out for a Friday. And don't forget, tomorrow, 8 o'clock Eastern time, we're going to execute this strategy with all of our clients in the trade room. How about some S&P? S&P is bearish, got clobbered today, trading down at the low of a channel, just inches away from the measured move target. Now, I don't want to sell the low of this channel, right? I don't want to make it a habit of selling at support in a bear market. I want to sell at resistance in a bear market. So I'd rather sell up near the high, and that 13 and a quarter reversal line will make for an excellent area of interest with a target back down to that measured move. So as we look at this, you'll notice here, right, one leg, two legs, and I measured this 3 times just to make sure I wasn't like standing on only 1 foot or something to make sure that was correct. I'm amazed that they missed that objective by only a few inches there, right? What is that? 2 ticks, right, off of that low. It seems crazy to think that this much strength going lower and they couldn't get that measured move accomplished. So that is definitely a leftover mission that is unfinished here. That is unfinished business at 75 3/4. At the same time here, we have this bear channel drawn off the highs, copied down to that low, and you can definitely see, right, that we are coming off of that low. As I look at this candlestick wick, though, it looks like it might be more like that, right? Shave off the wick at the bottom. That brings us up right at the wick right there. So it looks like that's going to be your channel here for now. At the same time, too, you can also see this trend line I've drawn going higher here. We have what looks to be a potential two-legged move, right, coming off of that low. We also have a round number here at 2,600. You know, round numbers are round numbers. They're just like any other number until we start seeing the market respond to them, right? One of the big mistakes I made early in my career is I got freaked out about all round numbers. But the reality is just like the high of day, right? The high of day is just another price level, right, until we start reacting to that high of day. Same thing for a big round number. 2,600, so it's like any other number. It's no different than 2,602, but in all reality, sometimes those big round numbers, they take on a life of their own, and if we do see the market kind of starting to get consolidated around that big round number, then we know we have to treat it, right, as a price magnet and as a range scenario. Bottom line, though, is I've got a bear market. I'm looking to sell off resistance. I have a reversal line here at 13 and a quarter. I have falling resistance coming down the top of that channel. I have what may end up as a rising resistance trend line here if we can get that right to work here in the short term. And then for support levels, we have the low of the channel, right? And of course, that measured move here, right, for tomorrow. There's not a lot else besides as we go lower, there is that ominous low from Monday, right? 25.29, right? If I had spooky music, right, or really really down emotional music here, right, I'd be playing that really dreary music right now. Wah, 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 right? We get that prior low. That is going to be a big psychological level, right, for buyers who are dip buyers and for sellers who are trying to go back and run this sucker lower. I mentioned this earlier in the week, right? We got to get back to those lows and prove that we can run through those lows, right? And then things are really going to get interesting here, right, for this correction in the U.S. equities. This could end up being just one big range, right? Down to that 25, 29, and then back up, right? Up above that prior, right? Last Friday's high, right? So we could end up rotating. We'll know more about that tomorrow. I don't want to get too far ahead of myself here. We'll know about that. We'll know more about that probably next week. Bottom line is I want to sell at resistance. What if price goes up? What if price goes down? What if price goes sideways? Price goes higher here. One leg, two leg, trap high, failure into pullback. That will be wonderful, selling up around, right, those levels of resistance. Hopefully a chance to use that trend line, right, as resistance as well. If price goes sideways here, it would not surprise me one bit if we just sit here and go flatline tomorrow. Like I mentioned earlier, a lot of traders are probably exhausted. They're probably beat up. They're probably frustrated. And I'm sure there are a lot of traders. The price action, I mean, look at this chart. This is a 15,000 tick chart right now. Okay, I'm not sure if you guys picked up on this, but I've had to go from a 5,000 to a 10,000 to a 15,000 tick chart. And you might be wondering, why do I do that? Why do I use different chart time frames? Well, the answer is it's easier to analyze, right? I'm not going to trade off this chart tomorrow, right? I'll use a faster time frame to trade off of this chart tomorrow in the trade room, right? But the only way to really get your arms around this, right, because you don't want a gajillion candlesticks, right? The last thing you want is there to be a gajillion, a million candles all over this place, right? Slow it down. What I always tell my clients is get yourself a nice, comfortable chart time frame. Now again, there's a difference here, right? You've got your analysis chart, which is this one, and then you've got your trading chart. Okay, the trading chart is always the same time frame. Most of the time. This week we've had to play around with the entry time frames because the volatility has been so insane, right? We went from using a 6-tick stop on a market like the S&P to literally needing to use a 12-tick stop, right? That's big, right? That's double the amount of risk. Now, you might be saying, but Joe, the reward is bigger too. You're right? With more volatility, the reward is bigger too. But do not forget, you first need to protect yourself against the risk. Then you can make the reward. Right? Do not be blinded by these big ranges right now, right? Unless you can stomach those big losses, right? You can't handle the big winners. Right? I feel like what's his name from that movie, right? You can't handle the truth. You can't handle if you can't handle the risk, right? And you can't handle the reward. And so that's why I say a lot of traders have really probably backed off this week because the volatility has been so great. So moral of the story though is I've had to slow this chart time frame way down just to be able to wrap my arms around this to be able to analyze it. Right? If this was a 5,000 tick chart, I mean, it'd be chaos, right? There'd be so much data, it'd be difficult to analyze it. So that's a little trick, right? Whenever there's a lot of volume or a lot of range that we're seeing right now on your analysis chart, right? Slow it down to be able to get everything in one screen like this, right? I don't want to have to scroll back. I want to see it all right here. Okay, that makes it easy for me now to lay my plan out for tomorrow. Then move over to that faster time frame. And again, I'm telling you, the E-minis right now, they're making it almost impossible for someone with a relatively small account. Like I said before, you'll need a 3 to 4 point stop right now to be able to absorb all of that risk. Most people, if I told them to use a 3 to 4 point stop on the S&P for day trading, they would laugh at me. But that's the volatility we're seeing right now, right? So cram it all in, slower time frame, get a good picture of the layout, get a bird's eye view of the layout from today. That will help you pinpoint those areas, and then we get into those areas, right? Zoom in on that faster time frame, find those entries, and trade the plan. All right, guys. So with that said, right, we know if price goes up, we know if price goes down, right? What if price goes sideways? Like I said, right, a lot of volatility. Wouldn't be surprised if traders are beat up here right now. It may be a bear market into a trading range. Anytime we see a trading range, one try, right, two try, and back down into that range. Maybe we get a chance to use that battle zone. Maybe we don't. It's tough to tell. We don't know enough about that yet. What if price goes lower here? If price goes lower, same thing, right? We're going to continue looking for traps. Good example earlier this afternoon, right? Price running lower, right? Running lower. Price jumps up for the prior swing, trap high, back down again. right? When the price keeps just going lower and it's not pulling back, you've got two choices. Well, you get three choices. One choice is do nothing, right? Second choice is sell low and hope for the best. Okay, I wouldn't recommend either of those. Third choice, right? Find those prior swings, wait for those traps, right? Trap high and fire away, right? That'll give you a nice small stop with a nice big wide open space for a target, right? Because your target is back down to retest that low. I also want to mention too, this measured move, don't forget, usually when we get a measured move, we get that two-legged pullback and a retest down. So if we find ourselves kind of sitting around this measured move in the overnight or tomorrow morning, right, don't freak out, right, and don't expect a reversal, two-legged pullback up to resistance and back down we go from there. Pretty easy, right? Pretty easy. But again, the hard part right now in the E-minis is they are erratic, right? They're again, this chart doesn't do it very much justice because it's a very slow time frame, right? It's smoothing out all that chaos. Look at this on a faster time frame, and obviously if you did today, right, or anytime this week, you know exactly what I'm talking about. So be careful. Wear your helmet on that tomorrow, right? And if it requires a 4 or 5 point stop tomorrow, right, it's okay if you don't trade it. It is, I swear, right? The market will open up on Monday. It'll be easier, and we'll do it then, right? There's no gun to our head. There's nothing requiring us to do it. And especially if you have a strategy like we do in our trade room where we can apply it to the markets as well. All right, how about some Nasdaq? I'm going to kind of be a broken record now in the Nasdaq. Obviously, it looks pretty much the same. The one big thing about the Nasdaq is that low is really close right there, right? You can definitely see it right there. So Nasdaq is bearish. We're trading at the low of a channel, and this tells me to wait for selling opportunities up around the highs. And I can see a reversal line at 87.5 that'll make for an excellent resistance level for those selling opportunities tomorrow morning. One thing easy to see on this chart is this pending measured move and retest of Monday's low, which is clearly going to be a long-term target for the bears. And again, right, I'm sure there are a lot of dip buyers that are really watching, and they're probably freaking out right now. They were all the way back down to that 62.60 area, right, coming all the way, right, from that Monday low, right, coming to Friday's non-farm payroll. So we have, again, very similar here to the S&P, strong move down, right, bear channel. We're kind of hanging out right here now on that bear channel. I would much rather be a seller up at the high of that bear channel, right? Speaking of the high of that bear channel, we also have that reversal line at 87.5, right? You can see what happened back here. I'm not making this stuff up, guys, right? They love to come back to these reversal lines, right? And a good example on this, right? Those reversal lines here, right? You'll notice you need to get away from them first, right? You don't want to worry about this right here. That's a waste of time, okay? Don't worry about, right? You're not trying to do this. This is not the key here. Right? You're not trying to do this, right? I'm not trying to go in right there. No. That's a waste of time. What that will do is that will get you stopped out for a loss all the time. What I want is I want to go through that low, right? Really show me some separation there. Then now we can use it, right, as a key level of resistance now. Makes sense? Right? So get through it, then pull back on it, right? So you got that reversal line there. Don't mess with this stuff right here, right? That's rejection or acceptance territory. Go through it, two-legged pullback, right back up. You can even see how they use that trend line, right, for the sell right there. Failure into pullback, right, and back down in, right? Like I said, I'm not making this stuff up. These illustrations, we see these over and over and over again. You can see, oh, sorry about that. That's not the snowstorm, right? You can see that two-legged pullback, right, into a trap high, into a failure, strength into pullback, and back down again. How many times do I draw that every night on this newsletter? At least twice on each market, right? So again, you can see a good example of that today, right, on the S&P, right? So two-legged pullback, up, failure, strength, pullback, right, and go. Again, get away from it, use that, right, use that reversal line. What else? I think what's really intriguing, though, here right now is that measured move, and obviously that prior low, Monday's low from 62.60 here. You know, you could see this thing. We could literally see it trigger that 62.60, stop run, and this could keep going, right? So it definitely could. I won't be surprised, just because I'm sure a lot of buyers bought right there, and I'm sure there are a lot of buyers, right? Stops are probably sitting there. I hope they're not foolish enough to put their stops sitting right below that low, because you know what's going to happen. people are going to sell into that just knowing they can probably get a scalp, right, for a few more points below it. It's one of the biggest reasons why you don't use major swings for your stops, because market makers, they will purposely take big positions into where they know your stops are, because they know they'll stop you out and then it will run back higher. They can make money on both sides of that trade, right? Short and long on the backs in the opposite direction. Okay, so what's my plan here? Up, down, and sideways, right? We know what the up is, right? Two-legged pullback, failure, trap, right? Strength, going lower here. Again, look left. You see a good example of that back here. What if price goes sideways? Again, don't be surprised if we go sideways here. I wouldn't be surprised whatsoever if we either sideways out here or we end up down here going sideways tomorrow. No matter what happens here for tomorrow, though, if we do end up going sideways, I'm looking for 2 tries, right? 1 try, 2 try. Make sure you wait for that second try, right? We saw a great example of that today on the oil markets. Wait for that second try above that range. Then you know the buyers are all tuckered out and you can sell into their stops and send this price back down. If we do see price continuing here to go lower, watch those prior swings. Get price up and back down, right? Don't take the bait going lower. And this also goes for if this thing continues going lower here tomorrow. If it continues going lower, we're going to keep on watching for traps. Trap high, right? Trap high. Again, when the market goes into bloodbath scenario, right, where it just collapses, you can either do nothing, you can just hope for the best and sell short at the low, or do what I would recommend. Historically, it'll be more reliable, is sell with traps above those highs. In most liquid markets, it'll be much more effective and profitable for you to wait to sell at resistance rather than selling at the low as we keep grinding lower. Let's keep going. Not last but not least here, how about some gold here? They're not going to finish off this move before without me this night. All right, well, on the gold here, gold is stealing my thunder here this evening. The yellow metal is bullish and trying to retest the measured move, but usually when we see a measured move target tested, we get a 2-legged pullback off the high, so I'm waiting for that next leg lower to look for buying opportunities using a trap low in the battle zone tomorrow. Boy, oh boy, had a great session today on gold. Had a beautiful example of a bull spike and channel pull back, right, to a measured move. Now, once we get a measured move, we usually see a 2-legged pullback to allow buyers to buy, right, to buy low. As you can see right now, though, it doesn't look like the buyers got that memo. So if that's the case, then this then turns into a bit of a range now, right? And we're looking for one of 2 scenarios. One would be 1 try, 2 try, and buy off the low. Right? That's one scenario here for tomorrow. Okay. Second scenario would be we go back up to retest the high. We go through the high, right? Through the high, 2-legged pullback. Use this now as resistance, right? And we're looking for a buy going up to that prior week low. Aha, there's that prior week level. We haven't seen one of those yet, have we, right? We've got a prior month low to a prior week low. Wouldn't surprise me one bit if we roll up in a nice little tight ball around that prior week low tomorrow to finish up the session on the gold. So we get the prior week low, definitely within striking distance if we can get through this measured move. That's a big if. Now, don't get caught, right? Don't get caught making that mistake trying to buy a pullback into the measured move. Okay, chances are it'll rattle around a little bit, trap you out, and then go. So be very careful buying into that measured move. Like I mentioned earlier, strong move up. How strong? Strong enough to get that moving average above, then fake out, breakout, pullback, right? 2-legged pullback, moving average above. Use that resistance, right, as support on the way up to that prior week low from there, right? From there, I would imagine the prior week low becomes a sticking point here tomorrow. So if we do end up at that prior week low, watch for a trading range. 1 try, 2 try, right? Buy back up from there. So watch that to start sticking there for us, right, in tomorrow's session. All right, so we got it if price goes lower. We got it if price goes higher, right? Price goes higher, 2-legged pullback. Right, price goes lower, 1 try, 2 try. Because remember, if price goes lower right now, it's going to be a range. right? Make no mistake about it. It'll be a failure to push to the high. It'll be a range, right? So one try, two try, and back up from there if we go lower. If we go higher, we know what it is. If it goes sideways, we know the deal, right? We know if it goes sideways, we know what's happening, right? Buy low and go high here. How do we turn bearish? How do we turn bearish? You know, we did start the session today on gold, a strong move down into a trading range, right? They kind of knee-jerked below it and then bam, right back up, right? That was a really good example of today of how the buyers got a strength, pullback, strength on a faster time frame, obviously, not on this time frame, right? But strength, pullback, strength, right? We knew the buyers had control at that point, right? And went looking for buying opportunities on the pullback. And that was a pretty easy example of how a trend can change real fast when it comes off of, right, a prior open high, low close level. So how can we turn bearish? We do have a trading range down here. What would it take? Yeah, it would take some strength here, and it's going to be tough to trade this too. Be one try, right? Strong move down, right? Back to the moving average. It would require a lot of strength here going lower. And my big concern, obviously, at that point is going to be you're probably going to be right into that range. So if that's the case, if we do get that strong run lower, mark up those new lows, bring back to that high, right? Look for this range right there, right? That's going to be your area to be a seller as you go back down, right, to retest that prior month low just above that 1,300 big round number, right, which is waiting down there as well. That will take some time to see if we see that tomorrow, but that, of course, is definitely it's definitely potential, but as of right now, though, we got to make sure we get a reversal here first. So gold looking good here, and then last but not least is the euro. The euro has definitely kind of rolled up into a nice comfortable position here around this 23,000 area. Euro is bearish, right? Got a big move down in yesterday's session. We focused our energy today, right? Selling high on the euro. If you watched last night's newsletter, you knew that we were looking to sell high, right, as the market went higher. So we're definitely bearish. We're trading sideways. We have a bit of a triangle, maybe range right now, but we definitely do not have lower lows. We definitely do not have higher highs. This is a range telling me we have a bear bias looking for failures up above that range. Now, one thing to note, yeah, looky, there's that prior week low up around 23,715. It's a bit of a pipe dream right now, but you know what? If the bulls can get control above this range, we can then look for that to be a short-term target here for us tomorrow. Strong move down to finish up yesterday's session. Right? If you recall from last night's newsletter, we knew if price went lower, we're looking for traps. Back down to retest the low. We got the chance to sell high, but didn't get a retest of that low. That's creating a higher low. Draw that trend line. We don't have a lower high here. That is interesting, right? So I'm kind of cheating a little bit here right now. I'm drawing off from the wick to the body, but in all reality, you could look at this now as a double top, right, with a higher low, flattening moving average, right? We're bearish. We're going sideways here, right? We definitely have the bears in control, but we're not making lower lows anymore. So that tells us anytime we have a bear market and they're no longer making lower lows, it doesn't mean we're automatically bullish, guys. It means that sellers are rejecting the idea of those lower prices. That means they'll accept higher prices to sell, and we have to get them, right, enticed into that market. So look left, find some resistance, get it up so we can sell back down again. Now, anytime I have a triangle, I always like to go out, right, and project some kind of hidden levels here. For example, if I take those highs and I draw them down at that low, right, this would make for a good spot here, right, for a buy area off of that low. If I take these higher lows and put them up at these highs, right, that'll make for an excellent location there, right, for sells off the highs. So I'm using that triangle top and bottom to project, right, kind of these hidden channels here. At the same time, I've got one strong leg higher, pull back, another strong leg higher, puts us at that measured move. Oh, look what that is. That is a naked reversal line. We've already seen how powerful those are already a few times on this nightly newsletter. So if we can get that up, that'd be one try, two try, right? Remember, anytime we have a trading range, we always look for, here's my range, right? Always look for that one try, two try. Once you see that second try, right? Start looking for that sell signal going back down into that range. Now, again, the bears do have the long-term control right now, so I would like to err on the side of selling, but one try, two try, right? Get that battle zone waiting down below. Obviously, if you're going to be a buyer on this, you really want to use maybe a half-size position or a quarter-size position. If I'm going to be a seller on this, you can load the boat, right, with that full-size position, right? So think about it that way. If you're in a range-bound market and we have this, right, and we have this bearish bias to it, right? Full-size position, sure. Selling with the overall trend, right? Half-size position, third-size position, quarter-size position, right? Being a buyer, just to try to kind of get your expectations in line with it. So we get a trading range. Buy the low, sell the high, stay away from the middle, right? Stay away from that middle. That's why it's a no trade zone. One try, two try, back down in. One try, two try, back up in, right? It takes some patience in the middle, so get comfortable if you're trading this in the overnight session. Boy, how do we get to that prior week low? What would that look like? Well, it would first start with a strong break higher. Then the moving average would come over. Right? Then they'd hold the pull back to the moving average and they'd explode higher here. It's going to be a little bit tricky to get in on the way up to that prior week low. What is more reliable or more logical or more realistic for tomorrow, realistic is a better word, will be you get up to that prior week low, then we'll probably end up going sideways a bit here. One try, two try, right, and be a buyer from there, right? So that would definitely be something we could sink our teeth into there tomorrow. It's going to be tough, though, because you're going to have to see enough strength to get out of the range, and that strength will probably put us, if not right at the prior week low, probably pretty darn close to that prior week low. And obviously, if that's the big magnet for Friday's session, we don't want to be buying into it, right? Because chances are that's where they're going to rest, right? That's where they'll finish up the session on Friday. All right, guys, we got a great plan of attack here. Awesome learning opportunities here on the euro, right? Bear market, range-bound market, sell high. On the gold, we're kind of waiting to see what it does on gold. Do we go through and keep going, or do we end up pulling back, right, and buy the dip from there? Pretty easy plan there on the gold. Nasdaq and the S&P are both just really bearish right now. So again, as I mentioned earlier, right, be careful because that volatility is so high right now, right? Remember, you got to survive the risk, right, if you're going to be able to earn the reward, right? Not a good time to just gamble your money away right now. That's the opposite of what you want to do right now. When things get this choppy and this crazy, you want to really buckle down, right? Protect that cash because you'll be thankful you kept that account, right, when times get back to normal again. And then, of course, on the oil, big strong move down. Look at that follow through back down to that prior week low, right? And that measured move waiting for tomorrow. Guys and gals, it has been an awesome week here. Like I said earlier, I'm sure day traders are one of the only folks in the market right now saying what a great week it's been. But it's been a great week in our trade room. We're going to do it again tomorrow at 8 o'clock Eastern time. I hope to see you guys there. Don't forget, if you're on our YouTube channel right now, any topics you want to see covered in future videos, any questions you need answered about today's information, drop those questions and comments in the comment section below the video. Don't forget to subscribe to the channel and hit the bell icon so you always get notified. And if you're here on the blog at sidewaysmarkets.com, don't forget there's a link on the right-hand side of the website. Head over here to the School of Trade website. Join our free trial. I'll tell you right now, if you think I give you a lot of value on my newsletter, you're going to love my free trial. Join that free trial to learn all about what it means to be a client, learn more about our strategies, learn more about our entry signals, right? And don't forget, while you're here, check out our beginner, intermediate, and advanced classes. And if you have any questions, either post them in the comment section or hit me up on live support on the right-hand side of the website. I have taken up way too much of your valuable time. Thanks for being here, guys and gals. Enjoy tomorrow's session. If I don't see you guys there with me tomorrow, 8 o'clock Eastern time, be well out there, be nice to each other, and be here next time. Adios, amigos.